Introducing our new series of intimate in-person trading conferences in some of the greatest cities in America. It's Market Rebellion Live. Next up, this June in Sonoma County, California. Savor some of the finest wines in America while you level up your trading with Pete Najarian, John Najarian, AJ Monty, Ryan Mastro, and Bill Johnson. Sonoma is limited to just 25 seats to ensure every guest gets personal attention, so act now. Tickets are going fast.
Bang!
That's it. The clapper it's resorted to a clap of the hands.
I'm pretty sure my wife has hidden the clapper somewhere in this house.
Well, John, you're going to have to talk to a guy out there in Long Island.
Well, let me tell you a little bit about China, Judge. By the way, Pete, did you see that Mike North, friend of the show, was tweeting out that the president was asked about the Eagles going to the Super Bowl, and he said, "I'm a huge Don Henley fan." Now, that might have to be part of the macro minute.
Start it up, Jared.
Start the minute running, Jared. All right. So here's the real macro minute. We all know Jerome Powell's going to come on today. I will tell you with near certainty, it'll be 25 basis points, Pete, that he'll move rates up. He and the FOMC, the voting members, will move it up. But then he'll talk tough, like he's going to slam it hard if he feels there's any more inflation. That is the macro minute.
Well, you sound like you're in the same camp with me and our really good friend, Rick Santelli, John. Is there anybody better? I mean, he actually is the one person when there's macro crap to be talked about, he's the guy who covers it. And he does it in a great way. He does it rapidly because he used to be a trader. He knows how to speak fast, does a great job, and he lets us know. And he talked about inflation. It's still too high, but it's moving in the right direction. Probably exactly as you said, John, quarter point, that's what we're looking for today. We'll get it, but it's what he says afterwards.
Yep, that's it. That's the macro minute,
That's
folks.
it.
If I had the clapper, that's what I'd give you. All right, let's talk, Pete, about Stryker, because Stryker is a medical device company. They actually have been fighting the tape all day long and are, I think, just a couple bucks away from the high of the day, Pete. It's a $272 stock that had pretty impressive earnings. The earnings per share is about $6.40 per share. And the stock's up better than 7% against a 350-point drop for the Dow.
Well, they crushed the earnings, absolutely crushed them. They got in $3. They're looking at $2.84. They crushed the revenues, $5.2 billion for under $5 billion is what they're looking for. Sales growth of 13%. Their unit volume growth was up 14%. When you look at every single number, every single metric that you want, John, they've absolutely done everything we're looking for when you're looking for a stock to move to the upside that's already moved to the upside. So on top of the moves that this stock has made, it just continues to move to the upside. To your point, up 12% year to date, up 7% today or more. And it's just been a phenomenal run. I love what they're doing. Their revenues, their total revenues were up nearly 8% for the full year, year over year. That's another impressive number. They just continue to amaze, and they've done a spectacular job, specifically in North America.
Well, hats off to them. A great quarter for Stryker. All right, Pete, let's talk a little bit about Peloton. But before we dive into today, let's talk about what we talked about last Friday, the 27th. Roll the tape.
It was wonderful on the way up. It was terrible on the way down. Peloton. So, stock's $12.80. Somebody bought 25,000 of the 18 calls out in June of this year. And then take a look what they did. They sold the 15 calls in January of 2024, 6 months after the one expires and at a lower strike price. So we want you to be aware of that. We think that this is a long-term bullish trade, but not an explosive upside trade, that they have put this trade on to take advantage of what the market's giving them.
Bang. So that is a bang, Pete, because it's up over 21% right now. As you saw, we had it on 3 at 3 live on Friday. We do those every day, 3 p.m. Eastern time. And it was a loss. They had a 30% drop in sales as well, Pete, but the loss was smaller than expected. And people think perhaps the company has turned the corner. What do you say?
I say they don't even know where the corner is. These guys are going to drop like a sack. They're still a clothes hanger. They still have, okay, so the free cash flow, the burn has been reduced. Okay. By the way, they continue to lose money, which is not a good thing. They're losing much more money than they expected. They're looking to lose 67 cents, John, those earnings. And actually it was ended up at 98 cents. And the year before was $1.39. So it improved off of that. I just look at this one and say, you know what? The dash for trash, you talked about that yesterday. Here's another dash, because look at what's going on today. The market's getting crushed. Meanwhile, what's moving to the upside? Sure looks like Peloton's one of those names. John, in 21, it was 150 bucks. In 22, it was 27 bucks. Started off this year at $8. It's rallied 17% today to get all the way up to $15. So before we start going crazy, it's a great trade. It's a great short squeeze. You and I talk about it all the time. I think that's why these calls work on these kinds of names in a market like this, because of the squeeze. And that's exactly what I think we're seeing today. This is a company that still has huge fundamental problems in front of them.
Yep. But if you take the time, folks, to watch what we talked about last week, you'll see that you had exactly what Pete and I always like: limited risk. You defined your risk on entry, and you turned it into a 200% gain. It's awful nice to see the stock move 20%. It's also pretty darn nice to see a 200%, meaning you turned $1 into $3, 200%. That is what I'm talking about, Pete.
Yep. No doubt. No doubt.
Now, let's talk about RPD, because Rapid7, it's a big company that you've all probably heard of, right, Pete?
Oh, yeah. You just pull in, and in 7 minutes, they change your oil and they send you on your way, right?
No.
Oh,
No.
it's a different one.
It's a cybersecurity firm, for God's sake, man. RPD is not exactly top of everyone's mind when it comes to cyber, but they just got a big whistleblower that came over last month from Twitter and became part of the team. He was a cybersecurity guy when he was over at Twitter. And now they've apparently got Goldman Sachs looking for a buyer, Pete.
Well, it's interesting, John. It is an interesting company. It's interesting they went for the former Twitter employee to do this, who absolutely didn't realize that they had a couple of bots out there, right? I mean, there's only a few out there at Twitter, and he was all over it. But anyway, I digress. I will say this. They have the opportunity, potentially. They probably have all of what you'd want to have in a company, except one thing. They can't make money. They've never made money, and it continues to get worse by the second. John, in 2019, they were losing $1 a share. 2021, they were losing $2 a share. 2022, they're losing $3 a share. So this is a company that needs somebody else, and maybe this is the right decision. If private equity can figure out how to make money out of this company, this could be a huge steal right now. If they can't, it's a pig in a poke. And that's just what it is right now. And unfortunately, John, they haven't figured out that at some point in life, you've got to make money as a company. But I think that the exploration into private equity makes a heck of a lot of sense.
Yeah, and it reminds me, Pete, I'm not trying to make jokes, folks, but it reminds me of the pilot when he says, I got good news and bad news. The good news is we're making good time. The bad news is we're lost. So when you're losing $1, $2, $3, like Pete says, you got to cut the bleeding one of these days, or this one's not going to be around.
John,
all right,
John, as Bob Newhart said, it's kind of kidney shaped, right? He's trying to find Hawaii when he's flying over there.
Has anybody ever been to Hawaii? Old Dominion, Pete.
Yep.
I thought this one was interesting because it was up 11%, again, against a really bad tape. And the CEO basically said, I'm out in June, mic drop, because we're at the all-time highs or within kissing distance if we're not there, Pete. And I think he wanted to go out on top.
And he did, and he's crushed it. He'll still be part of the board. So if you love the fact that he was there and the direction that he has turned the company, he's still there. He's just no longer going to be the CEO. Elevated somebody else within the company. Free cash flow, $800 million. Earnings growth over the last 4 quarters, 45%. Revenue growth over the last 4 quarters, about 26%. There is nothing wrong about this company and how they're able to operate and navigate, John. The way they've navigated throughout all the energy costs that go into the whole thing with trucking and everything, they have done everything right, and you want to stick with this company, in my opinion.
Well, no disagreement on that one, Pete. Boy, hats off to that CEO. What a fabulous job in very challenging times. Yeah. Just ask the guys at UPS or FedEx. Yeah. FedEx more so than UPS really struggled. UPS is just this monster, and that's why Pete owns that one. All right, let's talk about Uber for unusual activity with me, Pete. All right. 15,000 of next Friday, 3250 calls were being bought. That was with the stock at about 3140. So in other words, the at the money call would be approximately the 31 strike call. They're buying the upside call for up to $1.44 today. That's $144 per option, which means if you wanted to simulate a 1,000 share position, you'd buy 10 of those, which would be about $1,440 to simulate a position of 1,000 shares. A lot easier to stomach than a $31,000 investment in 1,000 shares of the stock. And Pete, this one covers earnings because earnings are 2 days before these options expire. They are February 8th of next week. I like the trade. I don't know if Uber gets back up in the 35-40 range, but I like it for a quick pop. And that's what you have to take care of. Be disciplined about that next week, folks.
Yep, I agree with you, John. And we always talk about risk reward. I like the risk reward there as well. So I'm going to stick with energy. And when I say stick with, here's a name that I brought up, John, on January 24th. That's not that long ago. And it's rigged, Transocean. If you go to the very beginning of this year, stock was trading underneath $5. We had buyers of May calls. They bought a lot of May calls. Then they came back a couple of days later. They're buying the March calls. They were going for the March 7 calls. Stock was now at $6. Then it was $6.20 just last week on the 24th. They were buying the February 6.5 calls, 30 cents. I said, I like the risk reward. I like to see a company that people continue to come to the upside, John, and want to be involved in as the stock is moving higher. Well, it's moved from underneath $5 to now being above $7. So all those other calls have moved dramatically to the upside. Today, they bought 5,800 of the March 8 calls for 35 cents. Almost identical trades, each and every one of them, which makes me think same traders executing these trades, and they think this stock still has room to the upside. I love seeing that. You love seeing that. That's what we do. When we used to stand on the trading floor, what do we do, John? Sold, buy stock. Sold, buy stock. We are going after it, and this is exactly what you'd be doing now. You see these calls getting bought. I'm riding along with them once again. I love when we see these, John, and I think this is a great example of one of these options where great risk reward as well. You were talking about it earlier. Stock can go up 10%, and you and I would go, ugh. But when the options are going up 200%, you and I are going bang, giddy up, and everything else.
Yep, that's a fact. It always feels good to take that profit, folks. And you have to be disciplined about taking your losses too. Not every trade works. I had a trade, Pete, in Snap that I did this past week, and it didn't work. But I lost 48 cents, not even. So 48 cents versus making $2 or $3 on a trade. And there are some trades that have done a lot more than that, if you know what I mean.
Tesla.
You got to cut your losses and take profits when you got them. All right, let's do just a quick goodbye, Pete, to Tom Brady, because basically the GOAT, Tom Brady, greatest of all time, has once again announced that he is leaving professional football. My question to you, Pete, is do you believe him?
This time I do believe him, John. When you look at what the video that Jared's able to show and everything about what Tom Brady looked like at certain points in his life, you can understand why he was in the 6th round. You can understand why he's the 199th pick. But the reality is he is the GOAT. He's the most impressive player you and I probably have ever had the luxury of being able to watch. If you hate New England, you still love Tom Brady. You had to, because he was the GOAT. He was that good. He knew how to execute in an amazing way, and he never had really all of the great tools that so many other guys have that don't have the same sort of success. So for all those reasons, if he does step away and stay away from it, John, congrats. I'm not 100% convinced he's totally done. I got this book, TB12, sitting right here, 45, 46. The guy talked about playing into his 50s. I think he still could, so who knows?
Well, I remember, Pete, the Raiders had a real old quarterback that played well into his mid to late 40s, but he didn't play the whole game.
Right.
Weirdly, in Al Davis style, he would bring him in, George Blanda, at the end of the game, because that's all the gas he had in the tank was maybe for, 1 or 2 sets of downs. That was it. But boy, those were pretty crazy days. And Tom, obviously, completely different animal. That's no slight on George Blanda. All right, Pete, what about the coaching merry-go-round right now? What are your thoughts on that in the NFL?
It continues, and finally, John, we are seeing the dominoes fall just like we said they would. I mean, once one guy gets in place, all of a sudden there's that rush, right? Because suddenly it's like in the market, FOMO, fear of missing out. They've got to make moves. So, it's interesting to see. So the very first one to fall was Frank Reich. He went to Carolina. And then all of a sudden, Sean Payton goes to Denver. DeMeco Ryans goes to Houston. And we start to see this start to play out. Arizona's still looking for a coach as well. Colts haven't named one yet, unless they've done it sometime today. I haven't seen it. But I will tell you this, John. I think it's interesting to look and see, well, who's really done the greatest homework for themselves to position themselves as a coach, okay? So I'd love to challenge you and myself on this one. I look at the Denver Broncos. Now, they made the worst trade maybe ever. It might be worse than the Herschel Walker trade, quite frankly, that they gave away a first and a second and a first and a second and 2 former firsts and a third and other picks as well, and locked in a quarterback that nobody seems to like in Denver for $250 million. And now you get Sean Payton in place as the head coach, right? Well, they had to get rid of the draft pick, first rounder, number 19 pick from the Miami Dolphins when they sent Chubb, the defensive end Chubb, to Miami. They got a pick, 19th pick. They had to give that to New Orleans to get Sean Payton, who was still under contract. So he's got very little to work with right now, John, in Denver. And he's got nothing in the way of draft picks unless somehow they do some magic of some sort. And when you consider the cost of Russell Wilson, how much room do they really have under the salary cap? So there's a lot of different things that I wonder if Sean Payton really went through this or if he went for the money, because he is the highest paid guy in the NFL now as a coach. So that makes it interesting. DeMeco Ryans, you and I talked about him. We don't know if he's any good or not. He had the best defense in front of him. He was a defensive coordinator. Now he goes to Houston, who had the worst defense of almost every single category and one of the worst offenses in every single category. John, they were giving up 170 yards per game on the ground. I mean, they were just pathetic. So it's a matter of where do you think you really want to go? I think Carolina's got the best chance to maybe move somewhere quickly, but I don't like their quarterback situation at all. And here's the quarterback whisperer. Maybe he can do something. So what do you think about these 3 coaches right now?
I think your expertise on this is much more valuable than mine, Pete. I'm one of those guys that, was totally in the camp that, like we said yesterday, we might see Aaron Rodgers go to San Francisco. They're not getting rid of Kyle Shanahan. I know we're not talking about a new coach there, but I really do like, the more I've thought about that, the more it makes sense. Bay Area guy going back to the Bay Area, and they are desperate for a quarterback to carry him for a year or two. And one of the best guys in the game's available, I think, to make that move. So, but we both know that move doesn't come cheap. No. But the Packers really don't want to have to fulfill the remainder of that contract, I don't believe, because what is it, Pete? Was it a 3-year that he signed? I think it was for like 140 mil or something like that. Yeah. I got to believe that Rodgers would be a good fit for San Francisco if they can make the trade, because again, he's under contract. This is not just picking him up off the waiver wire or anything else. What about the Super Bowl, Pete? What are your thoughts on how the Super Bowl is shaping up?
Well, and that's something that we got to talk about, John, because it's kind of fun. This could change over the next 8, 9, 10 days, whatever it is, till we get to the Super Bowl itself. But it's interesting, right? Because you've got the Kansas City Chiefs kind of limping in, and meanwhile, you got the Philadelphia Eagles roaring in. So does that actually continue to play out over the next couple of weeks up to the Super Bowl and that night? And that's going to be an interesting one to watch. But, Kansas City, they were in an absolute dogfight with their quarterback, Mahomes, limping around on the field. Clearly, he was not healthy, and yet he was able to drive that team the way they needed to drive down the field, do all the things they needed to do to win that game. And what really did change that game, Joe Burrow, who had an unbelievable year, and I love the kid to death, I truly do. But those 2 turnovers, John, that's not easy, because it's not necessarily whether or not you get points off the turnover. I mean, that's the double whammy. But the other is changing of field position and all the rest of that. And I think that's kind of what happened to them in the fourth quarter. It gave Kansas City the opportunity to get that field goal to win that game 23-20 and leave them no time left. There's a lot of different things about that side of it. And then I look over at the Philadelphia Eagles. They're playing against a group, John. The 3rd-string quarterback goes out. 4th-string quarterback comes in. He gets hurt. 3rd-string quarterback comes out without an arm. He's running around like this. He can't even, he's got like a flapper. And there's just no chance. And yet, Jalen Hurts didn't have his greatest game by any stretch. He threw for like 150 yards. But I think the dual threat that he presents makes him a really dangerous quarterback. And we all kind of know that already. But, the guy ran for 700 yards. He's thick. He's got that body of a running back who's playing quarterback, and he doesn't mind just tucking it in and running it. I think that's going to be a real headache for Kansas City. So early on, I'm looking at it thinking, I think that the daggone Eagles are going to fly, Eagle fly once again in the Super Bowl, and they're going to come back with the trophy. How about you?
I have to say that too, Pete. No disrespect to our friend Jim Cramer. I know he's rooting for the Eagles. But if Mahomes was 100% healthy, the game might be closer. But still, you've got the 2nd best defense in the NFL. And boy, were they smothering people. And then you've got one of the best offensive lines in all of football. And I'm talking about the Eagles in both cases. Kansas City does not have the best defense, and they are battered. So I am, quite frankly, Pete, thinking the line is wrong at 1.5. The Eagles are favored by 1.5. I think that is wrong. I think they win by more. So I'm going to make a bet myself and try to lock in the 1.5 right now, because, and it doesn't mean that I love Patrick Mahomes. I love Kelsey, and the way they play.
Which Kelsey? Just kidding.
Which Kels or Kelsey? Because I've heard them both pronounce it differently. Obviously, the one guy's an offensive lineman for the Eagles. That's why I say one of the best offensive lines out there, and the other is the all-pro, all-world. Pete, he would have to be my pick over Gronk. Travis would, in the, for Hall of Fame vote. Now Gronk is probably getting in, but I think Travis is the better tight end all around
Yeah.
because he's not afraid to block and he can play tight end all game long, whereas Gronk has his flashes here and there. And I love the guy, but I think Travis Kelce's the best player that I've seen at tight end in a long time. Anyway, I think with Mahomes still a little banged up, even though they'll give him a ton of treatment before the game, I think the Eagles should be favored by at least 4 right now, Pete. More than a field goal, 3 and a hook or 4. It's 1.5. And I think they're too much money coming in on Kansas City and not enough on the Eagles. They haven't watched them play, apparently, in the last 2 games and haven't factored in that the Kansas City team is playing banged up.
They are banged up. They're banged up everywhere on offense and on defense, John. And I totally agree with you. And that's why we did this early, though, folks, because next week we get to look at this all over again and just sort of see how is it playing out and what does Pat Mahomes look like and what does the health of either team, both teams, really start to look like? Does somebody get arrested? I mean, it's a lot. It seems like there's always something that goes on right before the Super Bowl. Guys have a lot of fun. They'll be in Arizona, John. So we'll find out. We'll be following that, and we'll give our predictions probably that Thursday right before Super Bowl Sunday, so we can get right in front of that whole thing. But it's going to be fun, and there's a lot of different things that people can kick around for the next week and a half or so.
Yep. Well, that's going to do it for us today, folks. I'll be back with 3 at 3. And if you don't think we'll be patting ourselves or myself, Pete, on the back for AMD, which we talked about for unusual activity, and they were buying upside calls, and those calls went deep in the money. It's about a 340% winner, Pete, if the stock stays over 80, and right now it's 81 and change. So that, my friends, boom. That's why you trade. That's why you trade options. And we'll be updating Peloton and AMD as well as 3 fresh trades, 3 at 3. Pete and I are back tomorrow at 1. See you then.